Okay, so Darren, walk me through the different types of debt products that you were mentioning just a moment ago.
Yeah, so common debt products usually have a yield or a return annualized out between 8 and 12%. I would tell you most of the time on average, you're looking at close to a 10% yield, right? And that's the common industry standard with debt. And I think that is a good return. If you're looking more on the private equity side of things, you'll probably more commonly see a 15 to 18% return or yield, right, on the capital that you participate with or you lend out, right? And that ultimately those differences in yield is really the risk, right? Like the higher yields means there's a higher risk, right? And we kind of see this commonly within Gator, right? Gator happens to be a high risk, high return, right? So you have more closer to like, a 50-50 in Gator that if you put it in, you might get it out, right? It might work, it might not work, right? The returns are just astronomical, right? And private equity, same thing, right? A little bit less right risk, but still like a moderate type of a risk return, right? And that's why you see that 15, 18% returns. And then debt happens to be the less risky, right? Because most debt products, right, have quite a bit of security around it, meaning they have security around assets, right? Personal guarantees, things of that sort. And when they're in a debt product, right, because they're a little bit more of a safer or less risky, they have a lower return, right? Everbridge, though, is unique because we are a debt product, but we're giving essentially private equity returns, right? So less risk, right? But higher type of returns, right? And I think that's really the value of Everbridge, right? Is that you can participate as a lender in a debt product, but get equity type returns. And I think that's something that's super unique. Like I underwrote a deal on Monday where someone wanted to put in $150,000 as a down payment to this business, right? But they were only going to yield annually between 20 and $27,000, right? But now they're a business owner, a business operator, right? So it's not like they're just going to sit back and relax to collect that 27,000 on the 150 that they put in. Like they're going to actively be in this business and working it. I turned around and I said, I challenge you, why not go in and participate with Everbridge at $150,000 and at 18% return? You'll make roughly around 20 to 27,000 bucks, right? I don't remember the exact math, but you're almost in the exact same situation, right? But with no headaches of being a business owner operator, right?
Right.
Like it's very passive in that sense, right? Is you're lending in a business buying box, right? So like you are still doing business stuff. You're just lending on the businesses with a high yield return, right? Kind of a situation. And so I think that's really ultimately the uniqueness in which Everbridge can position themselves. And I see this a lot with a lot of businesses from an underwriting perspective that have low margins, right? And you have low margins. Why wouldn't you just lend your money out versus
Yeah.
putting your money into the business, right? It to me, it just makes more sense that way, right? If you don't have a business that's generating 18% margin, right, or net profits, like you should just lend it out then, right? Because like why buy a business that's only giving you 5 to 7% returns when you can lend it out at 18%, right? And sit back almost and relax and collect a paycheck. Mailbox money is what I would call it, right? Than having to like deal with the headache of my employee called out again, right? Like I kind of joke sometimes when I'm out to dinner with friends and I see them sitting there on their phone, over dinner, and I'm like, what's going on? It seems like you have kind of a bit of a fire on your hands. And they're like, yeah, I got an employee calling out tomorrow, right? And you're like, yep, I don't miss those days. Right? Kind of a situation because, right, like my capital's working while I'm eating dinner. You're making capital like, not passively kind of a situation. You're in your business and you can't enjoy dinner right now, right? Now, I'm not saying that's always the way it should be. Like there are definitely some benefits in owning a business. Like I still today own my own businesses, right? Um, but there's other people like there's just different opportunity, right? Kind of a situation like, and that's sometimes like I just tell people, what's the cost benefit here? Putting 150 into this business or putting it with Everbridge, right? Like look at it that way. Like, what do you want to do with that 150 ultimately? So
That's awesome. Yeah, it really puts it in perspective when you can make equal returns without doing all of the work.
yeah.
And like you said, missing, the moments that the whole reason that people get into business is to have more financial freedom. And then when when your nose is in your phone during dinner, you're actually missing out on the parts of life that
Yeah.
drove you to get into business for yourself in the first place.
Yeah.
So why not make the same returns or similar returns and without the headaches so you can enjoy those moments with your family?
Yeah.
Makes a lot
Absolutely.
of sense. Can you give me a 30,000-foot view for folks that are seeing this and want kind of an encapsulation of what Everbridge does?
Yeah. So 30,000 foot view. Everbridge is a short-term bridge lender for business acquisitions primarily. We actually do some other types of loan products such as asset-based lending, debt consolidation. But again, we are still in nature short-term bridge lenders. So even when we provide these other type of debt products, again, like ABLs or asset-based loans, we actually do employ an exit strategy for every one of them, right? And so the product itself relatively stays the same in regards to like the loan docs and the legalities, right? And how we provide the capital because at the end of the day, they're short-term bridge loans. So we help people get into these deals, or we're essentially a short-term fix for cash flow today. And then we provide a long-term solution for our clients or our borrowers at the end of the day. And so ultimately what that looks like and what I ultimately like in this too is and from a real estate perspective is we're exit-based transactional lenders, right? And ultimately what that just means is that exit-based means instead of being a bridge lender and just saying, hey, in 6 months we're going to balloon this and it's due, we put in the exit for you, right? We help provide an exit, right? And I think that's what is really the strength of our product, to be honest, Daniel, is that we're not just bridge lenders, like we're truly exit based, right? Meaning we do put an exit in and there is something there for our borrowers that we can partner with to help them with that exit, right? It's not a situation of we bridge, you figure it out as the borrower, right? It's going to balloon no matter what. And if you can't pay it back, then we'll just quote unquote, we'll use the basic term foreclose, right? Or we'll call a default, right? That's not really Everbridge's goal, right? Is we don't want defaults in our book, right? Like we truly want our borrowers to be successful, and it's why we try to help them to put in those long-term solutions. So there are exit-based transactional lenders, right? So transactional lenders meaning, right? In all our parties, we have the A and the B, right? So we go from point A to point B. So A is kind of the origination of the deal and the opportunity. Point B is closing it, right? And then C is the long-term debt solution, right? So we're transactional lenders in that we're essentially the B in all of these deals, right? And we get you to the C, which is your long-term debt financing solution, right? And I think that's what is really powerful about what Everbridge does, but we're also really well invested in the success of our clients, right? Like we are a small shop. We're not here producing millions of loans every single day. Like we're very picky, I guess, for lack of better words, on the deals that we provide lending to. Like we want to know our borrowers are the best of the best borrowers, but also the businesses that we lend to are also the best of the best. Like these are not just, oh, we kind of look through it really quick. It looks pretty good. Let's lend on it because we can make $10, right? Like we're not here just to make a dollar. We're here truly to like watch these businesses truly be successful at the end of the day. And I think from a lender's perspective, right? Like not many lenders are going to be invested in your success. They're invested in their profits, right?
Yeah.
Everbridge is more invested in the success of our borrowers than they are in our profits, right? And I think that's what makes us powerful and successful at what we do is because we are truly here to help our borrowers, right? Be own and operate a successful business, right? And I will be the first one to tell you, I'm always helping our borrowers with their business, right? Giving them different marketing strategies, helping them with their profit and loss statements. Honestly, if you came to me today and she said, hey, I've got a business and I don't know how to do any of my financials, I'd probably help you, right? Because I just want to see you be successful. And I think that's really where Everbridge's heart is really just we want to see our borrowers and our clients be successful. And no matter what that looks like, right? Because their success at the end of the day, truthfully, is our success, right? And I think, you know, when you have more of a care in someone's success than your own profits, I think you'll see more success throughout your business, right? And I would say that in any business, right? Like if you care more about your customers than you care about your profits, I think your care and your customer service will drive you further than your profits will ever.
Yeah, 100%. And you and I and John were talking about this at Squat Up Summit. Um, the way that we get the country kind of back on track is actually through small businesses. And Cody
Mhm.
Sanchez was talking about this a lot, but you and I and John were talking about this, the way that we can correct and take back some of the financial power in this country is through successful small businesses and
Mhm.
seeing, smaller entrepreneurs become successful.
Yeah.
Because if we can control people's financial destiny, or excuse me, promote people's financial destiny and financial freedom, then we have the ability to create a ripple effect throughout the country and kind of bring back small businesses, and they don't have to die in the silver tsunami that's coming.
Yeah, right. And these small businesses for me growing up were the things that helped define me as a character, right? Like I still go to the same little tiny mom and pop Italian shop right down the road from me
Mhm.
because they survived COVID. I saw their blood, sweat, and tears. The dad's always in the back cooking and the son's always at the front house serving, right? I'm always happy to pay for a $25 bowl of pasta, right? Because I know what they're doing, right? Like the support and the challenges they go through. Like I want to see them be successful and I'm willing to pay a premium, right? On a bowl of pasta, right? Because I love what they're doing, right? I love their entrepreneur spirit, right? And I know how hard it is to be a small shop and do what they're doing, right? And I've been a small business owner, everything I've ever done, right? Being part of your community and building those relationships mean more than anything else, right? Like one thing that, right, like that we saw and learned from Squad Up, right? At least for me, is the power of the relationships, right? Like we talked about this before we started recording, right? That I was out there in bed no later than 2 a.m., right? And my normal bedtime's 9 to 10, right? But that was the power of the relationships, right? The connections that we make in our communities will drive us further than we've ever have in our life, right? And I will stand by that. Our relationships 100% build our character, but also can help elevate us to a whole new level, right? And I would tell you, like within Everbridge, Ryan, Russell, Judah, they've all pushed me to go higher than I've ever had before, right? Like again, before we had this call, my initial when I signed in and said, "Yeah, I want to be a partner in Everbridge and I'll be your CIO." I was like, cool, I'm gonna do all the underwriting, sit behind a screen, right? Like that's what I'm gonna do. But now, right, I host Zooms for Everbridge, I host Zooms within Gator. I am now having to create social media content, which if anyone knows me, I don't like social media content. I don't want to do that stuff, but I'm doing it. I'm raising capital, right? Like I've never raised capital in my life. I've never had to raise capital outside my very first business acquisition, right? And I borrowed money from my mom, but I've never done it, but I'm doing it today. In the last 2 months, I've raised over $1 million, right? Um, and now I'm learning AI, right? And how to implement AI automations in our business to streamline a lot of our systems and processes, right? So I've now gone to CIO to IT to marketing, right? And capital raising. So like I'm wearing multiple hats within my organization, but I can only wear these multiple hats because of the communities that supported me to do it, right? Like that pushed me that said, Darrin, you can do these things, right? They limited my self-limiting beliefs about who I was as an individual and pushed me to go further, right? We can do these things as a community to push again, even our small business entrepreneurs to push beyond, right? Like go from one Italian restaurant to maybe even two, right? Or add some marketing to continue to grow that business, right? Kind of situation. And so these are the things that I want to continue to help our communities with and all of our entrepreneurs, whether past, future, present. I want to see them be successful. Like I am super passionate about helping this generation of entrepreneurs be successful, I even signed up for um an entrepreneurial like ministry at my church, or at least to
Oh, really?
attend. And right, to attend and just meet other entrepreneurs in our Christian space, right, and brothers and sisters, right, and help them with their entrepreneur journey if that's my calling, right. I'm gonna
Yeah,
attend and just see what it's about, but um, these are the things that I think we can truly make an impact within our communities.
absolutely. So let's say I've got $50,000 in savings and I'm tired of it losing to inflation and gaining less than a half a percent
Yeah.
at the bank, or I've got 100 to 150K in a 401k and I've lost a quarter of its worth. Let me start that over. Or I've got 401k and I've got 150k in that old 401k and it's lost a quarter of its value over the last several years because of the volatility and the markets. How can I get on board with Everbridge and how can I get that 18% returns with a percent and a half monthly payouts?
Yeah. We do everything via a loan participation, essentially. And what a loan participation ultimately looks like, Daniel, is I liken this a lot to like the big banks and how they do loans. So if you ever went to the bank, maybe we'll call it Wells Fargo, and you asked them for a $50 million loan. Well, they'll do all the underwriting and they would service your loan. So if they approve the loan, they would be the quote unquote lead lender and they actually participate out that loan. And that's because they want to diversify their risk in the specific deal of the loan participation. And so what it looks like is Wells Fargo might say, look, we like this 50 mil, but we're going to put 5 mil into it, 10%, right? And then the other 90% to diversify our risk, we're going to participate 45 million out to everyone else. And so they'll reach out to Chase, US Bank, maybe some private institutional lenders, right? And say, hey, we've got an amazing opportunity, amazing deal. We think it's going to perform pretty well. Would you like to buy a piece of the loan? And these individuals or banks would come in and say, yeah, we want a piece of it, right? And so Everbridge kind of took the same mechanic, but instead of doing $50 million loans, right, at an institutional level, we decided to do this more on a private credit level, right, where we're doing loans or business acquisitions between half a million to about 1.5 million, right? And then we participate that loan out. So someone with $50,000 can kind of come in and say, hey, we'd love to participate with Everbridge. This is what I would consider lending in a box, right? And saying, hey, we love this specific deals in, or we love that specific deal. We want to participate in that deal, or we like your entire portfolio. We love to participate in your portfolio. How do we participate? We would send you the agreements, right? And you would essentially wire over the money, and then we would allocate your capital into our deals, right? Or that one specific deal that you want to be in. And that's how we do our loan participation agreements is just buy a piece of the loan or buy a piece of our portfolio and participate with Everbridge. And it's a really unique opportunity because if you're participating right now in the stock market, right? And today is May 6th of 2025, right? So if you're watching this at a later time, but the stock market is not great right now. Like we have just a lot of volatility. There's some days where we're up a point, half a point, and then there's other days we're down like, you know, 2%, right? They're like just insanely crazy fluctuations right now, right? I think year to date, I still think we're down 13% year to date. I could be wrong, don't quote me on that, but we're still down, right? And so I say like Everbridge is a great opportunity to hedge for the volatility, right? And so like if you were participating with Everbridge today and maybe you had 50%, right, of your allocation into the stock market and 50% in Everbridge, right? You'd be net break even, right? For the most part, or even maybe even a little bit up. Because if the stock market is down 13 and Everbridge is 18 annualized, you're up 5% actually this year, right? Which is pretty cool, right? Like you've kind of hedged for the volatility with the stock market, right? But then when the stock market comes up, right? And it comes up 2%, you're positive gain 20%, right? With participating with Everbridge, right? And which is really unique, right? And so I think Everbridge is a great opportunity to hedge for the volatility in the stock market, no matter what, whether it's good or bad. It's very consistent, right? We pay you every 30 days. And, I myself even participate with Everbridge because I like the hedge against the stock market and the volatility potentially, but I still get the upsides too. If the stock market's good, I still have money there, so I still participate in there. But it helps me hedge for the downside, which is right what we always talk about. It's capital preservation, right? At the end of the day.
So if I have, let's use $100,000 because it's a simple number that people like me who are bad at math can understand.
Yeah.
So if I have 100 grand and I'm coming in on the portfolio on Everbridge's portfolio product, that means I get $1,500 a month
hmm
every single month, and that'll total about 18,000. Not
Yep.
about, it will total
It will. Yeah.
18,000 for the year.
Yes.
That's fantastic.
Yeah.
So it solves the inflation problem,
Yeah.
and you actually generate wealth, and it gives you cash flow as well.
Yeah. Absolutely. And that's what I use. I mean, I personally use Everbridge for is for additional cash flow, right? Like I call it, and people joke, I call it my sushi money. Not that I'm, like not spending that much on sushi, but I use it in that sense, right? Because sushi is more of a luxury type of meal, right? So it allows me to say, look, am I stressing about the fact that I want to go have sushi tonight, right? No, it doesn't, because I know my money's working with me at Everbridge, right? The interest that I make with Everbridge is covering my sushi money, right? Like I love and you know different vehicles or asset allocations that help pay for my lifestyle, to be honest.
Yeah. So if I wanted to um, participate, what is the best way to go about getting in touch with you?
Yeah. I would say first and foremost, if you're listening to this and it's coming through Daniel's social platforms, please message Daniel. Let Daniel kind of create an introduction email right to me, and then let's all, we can jump on a call. You can also, I host these Zooms every Friday that talks more in depth about Everbridge does at 3:30 Pacific Standard Time there every Friday, unless I'm sick or I've got a family emergency. But otherwise, I'm always there, kind of a situation. But those are the best ways to kind of jump in, learn more about what Everbridge does.
Dope. I appreciate it, man. I'm gonna